Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Today is Tuesday, the 23rd of March of 2021. There are a lot of headlines moving markets. We're going to unpack sort of what the markets are paying attention to. Therefore, we are too at Blanke, Schein Wealth Management. Thanks for watching. So our first headline of the day is the new home sales number for the month of February was just released and it was down 18.2%. That was a big miss because what was forecasted was a decline of just under 6%. So this is a triple whammy, 3 times as bad. That being said, if the numbers, especially in the financial world that we do, we analyze everything. If the numbers are high, you have to ask why. And as we unpack this negative headline, and you're going to see it all across, the headlines today as well as the financial journals tomorrow. I encourage you to actually read the news story because it's not as bad as the headline will be sold on TV tonight. What do I mean? Well, affordability went down. Mortgage rates went up a little bit. So to start the year, we had mortgage rates for a 30-year fixed under 3%. Now they're just under 3.5%. And so that's a 50 basis point rise, meaning as interest rates rise, the affordability slows down. But is that the story itself? No, because we're still realistically at all-time historic lows, generally speaking, for interest rates. So that's really not going to cool down the real estate market. What is it? Well, it's weather-related. Part of the story here. Think about this. We're in Southern California, so we've had beautiful weather. We're in our beautiful 75 degrees, sunshine season right now. So our real estate market is super hot. In fact, inventory is super low here in Southern California. So we haven't seen a slowdown. But if you remember back in February, which wasn't too long ago, Texas had the great freeze over. That whole state was basically frozen. So you really can't have transactions as normally they would. And all across the United States, there was weather-related activity. So that slows down, but 100,000 lighter than what was expected. That's not the whole story. So you have affordability as interest rates tick up. You have sort of weather-related, but the real story here is inventory is down, both by sellers. Because even if you were to list your home right now, you could sell it within a 30-day period of time. It's less than 2 months is the standard inventory in terms of how fast homes are selling right now. So it definitely is a seller's market. But then what do you go buy? Where do you trade into? Because you're still going to have that inventory constraint. And also the home builders itself, the contracts that are under contract right now for homes being sold, they have so many homes that they're not even starting construction on right now, according to the report today, simply because of commodity-related costs. So costs of lumber are rising, cost of labor is rising because of the demand is so great. So supply is super low, demand is super hot, and that's where you get this constraint of an 18% decline. So while you see a negative headline, don't be spooked by that because we watch the real estate market very closely for our clients here at Blanke Schein Wealth Management, and every conversation I'm having, doesn't matter where it is, back east or Pacific Northwest, even Southern California, or even in Florida, it is super, super, super hot. And I don't think that's going to persist or stop anytime soon, simply because we have an inventory issue and there's a frenzy to relocate and buy homes right now. So that's your real estate update. The next thing is this Thursday, we're going to have President Biden give his first official press conference of which, since his presidency, since January 20th, and he's going to basically unveil a $3 trillion package for infrastructure, COVID related. And there's going to be a laundry list of reasons why they need to spend the money. And we're going to have to understand why, right? He believes that he's hoping for a bipartisan support. He will get that on the infrastructure spending because there is a need for that. Here at Blanke Schein Wealth Management, we pay close attention to your tax and our tax dollars being paid and really reallocated and spent. Because that $3 trillion will work its way into infrastructure spending, industrials, and a few others. Therefore, those corporations that get those contracts will have an uptick in earnings. Therefore, their stock price will potentially follow. So we pay attention to policy in Washington as well as Wall Street all the time because those dollars will make certain companies do better than where they are right now. So that we're going to find out what he has to say on Thursday. It'll be very interesting as it relates to the Biden infrastructure bill. I've heard as much as $4 trillion. So we'll see where this ends up. That being said, he's going to have to do some compromising, otherwise he has to go to budget reconciliation if he doesn't have bipartisan support. So this could take some time. That being said, today Janet Yellen, as well as Jerome Powell, both the Treasury Secretary and the head of Federal Reserve, are by Congress had to testify based upon the first stimulus that they did, basically give an update as to how it's going and what they see for the economy. Janet Yellen spilled the news today, and she says for us to go forward to even hint at paying for President Biden's infrastructure bill, taxes will have to go higher. There's going to be a wealth tax. There's going to be capital gains raised tax. There's going to be income tax levels that they're going to flirt with as it relates to what they're going to propose as an offset from the spending that's going to take place. Now, if you've been following my updates, this is not a secret. At Blanke, Schein Wealth Management, I've been talking about this months ago, and I said, wait for year end, because their year end of 2021, they're going to talk about raising taxes. I was right about the raising taxes. I was wrong about the timing. They moved that up right now. There's 3 different outlets that literally release the taxes are going up, wealth taxes are going up, and it wasn't by coincidence. So I think what we're seeing right now is a coordinated effort to prepare the United States tax-paying Americans that your taxes are going to go up. We had all this COVID relief passed, and now going forward, we're going to have infrastructure spending of $3 trillion, $4 trillion, who knows. There's no one who's fiscally conservative anymore, both Republican or Democrats. They're all about making certain that money is being spent. Ultimately, I think my kids will pay the price. My kids will pay the price. But right now, the experts, the gurus, say that the carrying costs in the 10-year Treasury, because the carrying cost is so low that there's not going to be a problem in terms of debt servicing. When you have that much debt, yes, there will be a problem, okay? But right now, both Republicans and Democrats don't see that as an issue, and all they want to do is spend, spend, spend. So what do we do here at Blanke Schein Wealth Management? We pay attention to spending, because that's going to work its way into corporate balance sheets. It's going to make corporate earnings even better on some particular, there's going to be winners and losers, so that's what makes a market. And ultimately, earnings will be up, and markets will be up as a result of all of this money. Inflation will be up as a result of all this money. So how do you protect yourself? You have to invest. You can't keep your money in the banks, because they're inventing inflation, they're inviting inflation, and you need an inflation hedge, because everything that we know from travel next year is going to be not only opening up, but it's going to be super expensive. Your medical expenses are going to be super expensive. Real estate related stuff is going to be super expensive, from rents to everything related. Commodities, super expensive. How do you insulate and protect yourself, your future you financially speaking? You have to invest. You have to invest in equities. You have to invest in real hard assets. You have to invest in real estate. It's the playbook. The Federal Reserve is giving us the playbook. And don't be surprised when you look back and say, oh gosh, I had all this money in the bank, and the bank is paying you nothing for it. And we have inflation takes hold. Now, Federal Reserve Chairman Jerome Powell said that it's going to be a temporary inflation spike that we're going to see, so it's going to be okay, and he's not worried about it. I am extremely worried about it for my clients, and that's because everything that you and I spend money on goes up at a double-digit rate, okay? It's not that I go out and buy a Costco TV every single year, because the Costco TV goes down every single year. Quality goes up, the price goes down. That is also factored into the government's inflation CPI reading. So you have to understand that the way the government looks at it and reports it versus what you and I spend money on is very, very different. So medical bills are going up, cost of living is going up, travel related stuff is going up. So what we're doing at Blanke Schein Wealth Management is we're preparing our clients for today and far into the future to hedge against that and stay well ahead of inflation based upon all of the policy, all of the spending in Washington. And ultimately, that's why you have us on your side. So thanks for watching. And don't forget, tomorrow, this is the update I wanted to give you. Tomorrow we have Stephanie Link. She is a strategic advisor at 10 a.m. Tomorrow, March 24th, I will be interviewing her, and we're going to be talking about obviously policy, but more importantly, how she's going to be helping our team here at Blanke Schein Wealth Management. And you know Stephanie, she was just on CNBC earlier today, so she's a great CNBC contributor. Now she's working with us at the HighTower level and Blanke Schein Wealth Management. So thanks for watching today, and take care.